Hey, this is Justin with DayTradeTheMarkets.com on December 4th, and I wanted to look at a pretty wild market in the emini S&P, the Russell, and the Nasdaq, and also a really strong up move in gold, and talk about it from this perspective. Look at a couple things. Number one, what are level 3, what we call level 3 or extreme aggression bars? I want to explain what those are and how those can help you do what we call follow Rule 1. And by Rule 1, what we talk about with that is avoid being on the wrong side of the market. If you do nothing more than improve your trading by avoiding taking bad trades more often, it's going to make a world of difference to your P&L. So that's what we look at first, is how do you determine which side of the market you want to be on, and more specifically which side you don't want to be on. Because again, if you can just avoid one bad trade a day, one bad trade a week, it makes an absolute huge difference in your P&L. And that's not even getting into, Rule 2, which is get in on the right side of the market. Rule 3, find a really good place to enter that's low low risk, high probability. Rule 4, maximize profit on winning trades, minimize loss on losing trades. Okay, so this is just the first building block. And the way we look at this is we talk about these level 3 aggression bars. And so what those are, real quick, is our software does a lot of things. We look at the market from a bigger picture level, and we also look at the market in real time with order flow, data-driven evidence, and specifically these relative aggression bars that are kind of the building block, the first step of our software. And so what I've done, rather than have the big picture on there and the divergence bars and the filter and the support resistance zones, what I've done is I've just created a chart that only shows these relative aggression bars. So kind of, again, the first building block. And to make a little bit more sense of these relative aggression bars, the market moves, and it only moves when one side, buyers or sellers, is more aggressive than the other. We actually have a pretty detailed video that explains this in more depth on the How This Works page of our site. But essentially what we're looking at is we've created these bars that show us, number one, when one side is more aggressive than the other, when buyers are stronger or more aggressive than sellers, and then number two, to what degree. Is it moderately stronger, extremely strong, very strong, or extremely stronger in terms of the buying or selling aggression coming into the market? We really like to focus on these level 2 and level 3 bars. So again, what I've done is I've just created a chart where I'm showing level 2 bars and level 3 bars, and really want to focus on these level 3 bars. I've gotten rid of these level 1 aggression bars. I've gotten rid of the support resistance zones and the filter and deceleration, just to simplify the chart. That makes sense. So I want to look at a few markets now. Here is the Russell, and this is a 2-minute chart. You can use this on any time frame. But again, I've taken everything off but the level 2 and level 3 bars, and also these high velocity moves, which is just kind of another way of showing when strong buying or strong selling is coming into the market. And what we like to ask ourselves, especially when we have a wave of level, this is kind of a wave of level 2 and level 3 buying, can the low of this wave hold, and can we get some follow through above? And if so, that's telling us we want to be careful being on the short side of the market. And you can see, again, we get some strong buying that comes in, a high velocity move. We just have some follow through here. So this is telling us bulls are very much in control of this market short term, and you'd want to avoid being, going against that. Wait till one of these is rejected. Now you can see that this one, finally, we get some follow through below it, and that's after some selling starts to come into the market. And here it really accelerates with some extreme selling that's coming into the market. And you can see at this point, when we get some follow through, this is telling us sellers have more taken over this market, or at least that we're two-sided. Be careful. And you can see we just get more follow through with these level 2 bars, this high velocity move. Here's an attempted move back where this original move started. Here's an attempted move higher that really doesn't get anything. We can't get, it takes 15-20 minutes, but we can't get above that, and we finally go make new lows on some really strong aggression. We get down to this level where it's a bit of a battle. You can see we have level 3 selling, level 3 buying that's coming in. So this is telling us, hey, this is a really key decision point for this market. Can this market either get lower than this level 3 bar, or can we start getting acceptance above it? And you can see that we got acceptance above it with some more strong buying that came in. So this last two-thirds of the day or so was controlled by buyers. So again, be careful being on the short side here, be careful being on the long side here, be careful being on the short side here. Not even getting into the step 2, which is which side do you want to be on and how do you get on board. Not even getting to that level yet. Just avoid being on the wrong side. Okay, this is a good example. This is the Russell. Let's look at the here's the Nasdaq. Again, I've taken off everything except for the level 2 and 3 bars. And then obviously the Nasdaq's going to be pretty similar. You can see buyers come in, some extreme buying comes in, then we start to get some selling off of the high, some extreme selling, no follow through on some buying, some high velocity moves, and then you can see some buyers step in, very similar to what we saw in the Russell. Not quite as aggressive, but very similar patterns that we're seeing here. So again, help yourself stay on the right side of the market more often. Here's the ES. I like to look at the ES on a 1 minute just because it's a little more, it's a little slower of a market. This is a pretty wild day, relatively speaking, for the ES. Similar patterns. Here's some extreme buying that's coming in. You can see, be careful being on the short side there. We start to get some selling in here with some follow through. Strong selling comes in, a little bit of a buying wave here, two-sided market, rejection of buying off of these lows, new lows. You can see some strong extreme buying starts to come in there, more follows. So again, a little bit more of a wild day in the ES, and that's partly because it's a 1 minute chart, but you know, just an interesting day. Now here's the gold, just because this was a really strong move, but the same principles apply. You can see we get a level 3 bar on the low of the day. We don't get any follow through. We don't get a full bar below. We start to get, you know, we start to get full bars above. We start to get rejection off of these lows. That's telling us that there's the market auctioned low enough, couldn't get any more aggressive, couldn't attract any more aggressive selling. We slowly started to get some buyers that came in. We make new highs on some really strong buying aggression. This time there is follow through. Okay, buyers are now in control of this market. Rejection of selling, more buying, rejection of selling, and then we kind of get to a two-sided market there toward late in the session. But again, same principles apply. How do you stay more often? How do you more often avoid being on the wrong side of the market? So that's, again, the point of this video is just looking at what are these level 3 bars. How can you use them to, you know, avoid more often being on the right side of the market, increase your edge, make better decisions. So hopefully that makes sense. Again, I recommend checking out the How This Works page on the site. There's some good videos there. Let us know any comments you might have below, and we'll talk to you soon. Thanks.